Hi, this is Dean Aiken with the Best SA Homes Real Estate Team, and we'd like to talk now about the home loan process, the types of loans there are, and the process of putting that loan together. This is Reed Aiken, he's our primary mortgage lender, and Reed, kind of walk us through what is the process of putting together a loan, and then we'll talk about the different loan types.
Definitely. Yeah, the process of putting together a loan is typically about 30 days from when you go under contract. It starts with a pre-qualification before you even go look for homes to make sure that you're qualified for what you're looking to do. After that, it's the fun time. You get to go shopping, you get to look for the house, the one that fits all your goals there. That's where Best SA Homes is going to help you out, make sure they find the right home for you. Once we're under contract, you have the period of the contract to get the home loan approved, and that includes verifying income, assets, as well as getting an appraisal typically on the house. All of these are done as your contract is going, and we use all the information here for approving you for your loan.
There are three major loan types, right? I know there's other smaller loans, but the three main loan types are what?
Yeah, there are three main loan types. It's conventional, FHA, and VA. There are a lot of subcategories under each one of these for all kinds of different needs that fit for what you're looking to do.
So if I'm looking to buy a $300,000 house, what's my down payment difference between a conventional VA and FHA?
Yeah, so conventional mortgage, typically you need to have at least 5% down. Be looking at that $300,000 house, about $15,000.
$15K, okay.
For an FHA, it's a government-backed program from the Federal Housing Agency, and they allow you to do a minimum of 3.5% or about $10,500. So FHA allows you to come in with a lower down payment.
Okay, why would you want to do that? I know why you want to do that. Why would you rather do a conventional loan over an FHA?
Conventional has got more benefit to people who have higher credit scores and more money available to put down on the home. So FHA is still a wonderful program. Where it's more lenient is on how it views credit scores, debt to income, and how much money somebody has available to put down on the house.
So would you say someone doing an FHA loan typically maybe doesn't have as much money to put down, might be a first-time home buyer, someone who has more money to put down is going to do a conventional loan, and there's some more advantages to them to doing that, maybe a little low interest rate, maybe less fees and costs to do?
Typically your fees and costs are going to be about the same on both programs. The rate really won't move too much between these two. What your benefit is like you said, somebody who's getting into their first house may not have as much money to put down, may have a little bit higher debts that they have in there that could be a lower credit score or could need a little bit more room in their qualifying ratios to buy that house.
Okay.
And that's where FHA is a good fit for them.
And the last loan type?
Last one is VA. That one's for military, active duty, or retired.
Which is a big hunk of what we do in San Antonio.
Yes, definitely. And the benefits to VA is mainly that you can get into a house with zero down. Where there's a little caution to that is on each of these loans, you're still going to have closing costs. So not only will you have the down payment amounts, you need to also be aware of what your closing costs could be.
And what are closing costs?
Closing costs are made up of a couple of things. It's typically the appraisal report that you order, the costs for doing the mortgage, and then title costs for putting the home into your name.
And then it's also taxes and insurance, right?
Yes, so on each of these you have escrow accounts that you can do. FHA, VA, and conventional require them. Conventional requires it as if you're 20% or under on your down payment. And these escrow accounts are typically made up of your full year of insurance paid when you close, and then 2 months of taxes and insurance held in a buffer account.
Right, so often people go into the home buying process thinking, say they're a VA, that they have to put zero down, and that's true, that is their down payment, but they are gonna have closing costs, and a big portion of that is paying their taxes and insurance and setting up an escrow account. But they are gonna have to have some cash to do that. But you've kind of given them how much they need for the down payments. The closing costs are typically gonna be roughly $5,000 to $7,000, let's say. And then how long is the loan process?
The loan process typically takes about 30 days from start to finish, from writing that contract to close. In that process, it's mainly getting the verification done on all the income and assets, and then ordering an appraisal on the home.
Okay, perfect. Well, that's a good start. I know there's a lot more steps to it. understanding the underwriter and the processor and all those other aspects, but the basics are about a 30-day process. There's one of 3 different loan types and how much you have to put down, and that you also have closing costs. All right, well, we appreciate it. Thanks so much. Remember, buy with the best, sell with the best, Best SA Homes.